back to the Unique Trading Group. I'm Coach UV, and man, it's been a minute since we talked about this market, but let me say this right now. Most traders completely missed this rally. While everybody was waiting for the market to crash, SPY went from 680s all the way to nearly 740 within a span of a month. And now we're sitting at one of the most important levels we've seen in months, right? And if 740 breaks correctly, this next move could get very explosive. Now, I don't know if you've seen the chart here lately, if you've seen the SPY, if you've seen the market, but it's been very, very telltale. So in this video, I'm going to walk you through QQQ, SPY, IWM, the market structure, the dealer hedging, and why 730 held today, why 740 matters, and what traders need to understand in this environment before they get trapped chasing emotion. And listen, this market right now is rewarding patience and discipline plus structure if you know how to execute. It's not rewarding fear. It's not rewarding your opinions, and it's definitely not rewarding emotional trading. Do the opposite from all of that, right? Start practicing that, right? So smash the like button, subscribe to the channel if you're rocking with the content, and let's lock in. Now, the last time we really sat down and talked about SPY in detail, we were around the 680 mark, I want to say, right? In that area, it was, very particular. And the one thing that I kept saying was that this market still had room higher if structure continued holding. Well, we got that. And what did we do? We climbed on SPY. Right here, about a month ago, we did this video. We changed some things. We wanted to revamp some things for the algorithm, but pretty much we were talking about these same levels there, and the market showed us that. Now, not because the retail traders believed it. I don't think they more so believed it. I think what happened more so was the fact that there was positioning going on, right? A lot of positioning from the hedgers, the market makers, and we had liquidity. Liquidity provided some of that attention, right? That pressure position. So a lot of traders kept trying to short every bounce. A lot of traders stayed bearish the entire way up, and while they were fighting the trend emotionally, the market kept making higher lows. Simple elementary trading terms we learn when you first trade, right? Higher time frame bias, trend up, trend down, right? Higher lows, lower highs. It's just like a step ladder up and down, the same way you see in front of you. So that's why understanding structure matters. Now let's talk about today specifically, because today was important. SPY came down toward that 730 area, and I wanted you to understand something. All right, as you check out this screen, all right, understand that 730 was defense. All right, that was the momentum shift. All right, that was a critical level. All right, 730 was the put wall zone where it had to be defended. Right, 730 was the put wall zone. This is where the bulls had to break the bears in order to see upside momentum. Now, resistance turns into demand. I'm going to show you that on the charts in just a second. 732, the gamma flip reclaim, and the active buys confirm around 738. So you want to wait for confirmation. Do not chase the candles. All right, now let's hop over to the charts. Okay, because there's going to be something you want to watch. Specifically these levels. Now, SPY came down all the way to around the 730, 731 area, right? And what's important is that 730 was also sitting near that put wall area that we discussed. So you have a classic pattern here. All right, you see this gap that we had. Now, if you're not familiar with gap, it's your first time watching, understand that there are no buyers and sellers that exist when you see an empty space here, and the market likes to come back and to fill these gaps. Now, I'm going to make this gap visible for you. We're going to make a simple rectangular box. Okay, now if you're watching this, even if it's your first time watching, you can see that the market has been swinging right up and down, okay, back and forth within this pendulum swing, right? Okay, and what do we do here? This gap had to be filled. Now, this day was around, when the gap started, was around May the 7th, and it took us all the way to May 12th, so about a week for us to go up and come back to fill that gap. Gaps get filled. This is like an inefficiency in the market when there's no buyers and sellers. Again, that's what the gap is, right? An inefficiency in the market when there's no buyers and sellers, and the market makers have to come back and fill it. Now, what do we have here? We have a classic what? We have a gap fill and reversal. Why is that? Because price came all the way down, filled in this gap. As you can see, we bounced here around that 730 area we talked about. So a gap fill and reversal. Now, had it been a gap fill and go, you would have had this move here. Right, breakout, pull back to the breakout zone, gap fill and continuation. We didn't get that. Okay, we did not get that at all. We have a gap fill and reversal, and we also came back up here to fill these gaps. Now we're sitting at a critical moment right now. All right, we have a classic 2-try failure. The bears tried once, they tried twice. This is the second try here. This is the first try. We have a higher low here. Okay, out of these 2 moments, this created a higher low than this one. This is the moment I bought today. All right, this is how you get your 5x and your 10x moves, because if we bought 732 and we're almost at 738, 442 would be that $10 move. 440 is a very important number, and so you're going to want to watch 740 for a wall. That's a very interesting segue that I want you guys to understand. All right, check out my notations here. 740 breakout, that's what you want to watch. All right, that matters more than anything. That move back towards 738 was not random. That was the market showing us that buyers are still active, and this is where traders get trapped emotionally. Rookies chase the candles, they're going to chase the green candle, not realizing we're almost to a wall. Right, professionals, people who are listening and take trading serious as a business, we're waiting for confirmation. Right, that's the difference. Anybody can click buy during momentum, but understanding when to participate, that's the real edge. So right now, 740 is the battlefield, guys. 740 is the battlefield. That's the call wall. That's the area everybody is watching tomorrow, okay? And if we break above 740 correctly, what I want traders watching for is not emotional chasing. I want the breakout, then I want the pullback. Now I'm going to get into the charts and show you that specifically so you can execute it, all right? Then I want you to see if buyers defend that higher low. That's the setup, because a breakout alone is not confirmation. The pullback that holds is the confirmation for a stronger risk to reward. And if the structure holds above 740, then we can start talking about continuation towards what? 750, and potentially even those high quarterly targets around 665 and 770, as you can see here. So 740 is a major call wall. The setup, breakout, pullback, higher low holds, breakout alone, confirmation. Okay, these are the next targets that we are looking for. Now remember that I told you that. Now, what's your professional edge? Think about this, guys. Screenshot this, write this down, play this video back if you need to. And by the way, if you're enjoying any of this content, do the algorithm a favor, help the channel out, give us a thumbs up, smash the like button, and also share it with anybody you think might want this information as well, the same as you. All right, subscribe to the channel. All right, now, number 1, define your entry, your exit, and your risk before every trade. All right, let me say that again. Define your entry, your risk, and exit before every trade. Number 2, match your approach to the environment. Got to match your approach to the environment. All right, the setup might not always happen. Find a plan and master it. All right, master it. See what you can do to refine it. All right, and then add your tools as you go on. Number 3, you do not need every move. You don't need every move, just the right move. This is a buy the dip environment, guys. This is a buy the dip environment until otherwise it's proven. All right, until otherwise it's proven. That's what I want you to see. Okay, so let's get over to the charts. All right, now that does not mean that the market is going to go straight up, even though we have these technical breakouts. Right, that doesn't mean that the market is going to go straight up. Not at all. Doesn't mean that. No. And this is another mistake traders make. A lot of people think trading is about predicting every move, but it's really not. Trading is about managing risk while participating in the high probability opportunities. That's it, right? Is my setup there? Can I execute on it, right? No emotion, no thinking about it. Executing, defining our entry, exit, and risk. I teach this further within my mentorship. All right, we dive deep into actual live, like while the market is open, executing these things you learn during these live videos. All right, so sometimes remember that the best trade is no trade, right? Sometimes the best trade is pressing an advantage. Sometimes the best trade is reducing exposure. And sometimes the best trade is also doing absolutely nothing. That's maturity. Take this and run to the bank with it. That's discipline, all right? That's what separates gamblers from traders. Now, right now, this still feels like a buy the dip environment until proven otherwise. So you're seeing rotation, guys. You see that clearly. You see the rotation the same way it happened here. You see the rotation. And clearly we have what? We have these highs here. All right, that's going to be your resistance. All right, that's going to be your resistance, and you want to see the move do something like this, right? Say tomorrow you wake up in the morning, price is broken out, 740. It could come above, right? But you want to wait for that pullback. Right here's that sweet spot. All right. Usually the 21, all right, the 21 SMA, the 21 EMA. EMA stands for exponential moving average. It comes up and it catches price, and we get that breakout pullback. The breakout is 740, the wall. Okay, the breakout pullback. The breakout and pullback is us retracing when traders chase. All right, so depending on where we are, you want to watch for that move. Okay, remember these are also gaps towards the downside, and so we can come back to any of these prior levels here. We can come back and touch the zone 734. All right, we can come back and touch 737. All right, but ultimately, if we break out at 640, 640 will be the zone you want to look for resistance to turn into demand. So we can do what? We can continue higher towards 645, 745, and 750. All right, doesn't have to go straight up. But we're going to play those technicals and secure those profits as it's happened. Now, even names in the healthcare like Oscar, starting to catch momentum. We can check out Oscar Health. All right, we also traded this today, bought a couple of contracts around June and July, up a couple good percentages on the day for this. As you can see, we're up about 7 to 8% on Oscar, so the healthcare sector was pretty good. QQQ is still showing some strength. All right, here are the Qs. QQQ, as you can see, sort of like the SPY. You can see the two try failure here, once and twice. All right, we came back towards these previous put walls. We call this a higher low. That higher low is a simple thing that works, and it got bought. This is a buy the dip environment. Now, they're trying to catch those highs as well. Do not be the trader who is chasing, all right? Don't chase the highs. Always wait for a pullback. Now, 707, this layer here, all right, we're going to try to get up towards 710 and 711, another wall. All right, so be cautious if you don't catch the move. If you can get another pullback, try to buy the dip. If you can catch a higher low, rather momentum up. All right, now we are on a 30-minute time frame. These moves are coming from the daily, the weekly, the monthly, the quarterly, and so that's where the bias of the buy the dip environment comes from, because on a higher time frame we are showing momentum towards the upside. So that's why I say buy the dip, not just blindly, guys. Remember, I'm not a financial advisor. I'm only a coach and or a mentor. So take these with a grain of salt and do your own due diligence. You understand? Now you see QQQ, right? All right, the IWM also. See how the IWM is fostering in this environment with the small cap environment. All right, IWM is kind of struggling, lagging behind the others, but we still have the same type of moves here, right? We broke structure here. Right here at 282, we broke structure, but we caught a bid here and created a higher low here. All right, structure held there, okay? And now what are we doing? We are battling this zone here, right? And we can reclaim this zone here. This is our range of emotion. Get above that. We can continue towards the upside to do what? Try to fill some of these gaps. So 284 is what I'm looking for. Remember these videos, because we are going to come back and revisit just like we always do. You can make money from these videos. So if you're scared, stay out of the kitchen. But if you want some money, you want some action, all right, define your risk. Take these trade series, maybe paper trade it and watch, all right? I promise you, here at the Unique Trading Group, we have a lot of accuracy. So it can be real fun. Right now, you see the setup on the IWM. It's pretty similar to the Qs, pretty similar to the SPY. So we're going to hop back over to the SPY. All right. Okay, so day traders. Think about this. Let's clear this chart up. All right. Let's go over to the 15-minute time frame. All right. Now, I want you to see this and understand this for tomorrow for my day traders. All right. Got a special segue for you too. All right. Special for you too. Think about this right now. We're going to be reacting. Day traders, they react to the intraday momentum and they manage risk quickly. So swing traders, they're waiting for a cleaner structure, cleaner confirmations, right, on a higher time frame. Investors are more so focused on the bigger macro trend, long-term positioning. But regardless of which category you fall into, the mechanics stay the same. You need to define your entry. You need to define your exit. You need to define your risk before every trade. These are typically done with what they call OCO orders. That's right, OCO orders. OCO orders give you the ability to do advanced orders where you're making your entries all in one click, right? All in one click. That means you get to define what your entry, your exit, and your risk. All right. Now, if you want a clearer picture of what that means, I'll show you real quick. All right. An OCO order, one cancels the order. Order is a powerful risk management tool in trading that combines a limit order and a stop loss order simultaneously. When one order is filled, the other is automatically canceled. It is primarily used to secure profits and limit losses, often employed during volatile market conditions or to automate, say, a breakout strategy. All right. Now, are you guys picking up what I'm putting down? I hope you are. All right. This is why I teach this. This stuff is serious. All right. So do your homework and don't be those people chasing. Let's make some good money together. All right. That's one of the biggest lessons traders never fully learn. Is what I just told you. So don't manage risk emotionally in the middle of your chaos. You prepare before the market tests you. That's why I always say the setup is the setup. If your setup isn't there, you don't force a trade. You wait, because not every day is meant to be traded aggressively. And another thing traders need to understand is this: you don't need to catch every move. You don't. You only need to catch the right move with controlled risk. That mindset changes everything completely. It really does change everything, because you start to slow the market down. The market does a lot, right? You picking and choosing. You're in this Discord, these stocks, you're trading 10 tickers. It's not going to work. Slow it down, right? Focus on one with liquidity, right? That gives you a nice ATR. You want a nice street of 1 or more, right? My risk is 1, but my reward is 5. My reward is 6. My reward is 10. This is what you want to think about, all right? That's how professionals survive long term. All right, that's how they survive long term. So I want you guys to remember on the market. All right, the market Eternals are saying that the market is trying to go higher. You also have KRE, you have the banks, right? The banks, right? What they're doing right now, right? Making a bull flag, trying to get to higher highs. All right, we could get some pullbacks. These are market Eternals. So you want to make sure you're watching the banks, you're watching the bond market, see what's going on. Remember the levels on SPY. You don't want to chase, all right? You don't want to chase, guys. You want to wait for those levels. 740, wait for that pullback, right? This is what we're talking about, and this is what we are doing. So I hope you enjoyed the commentary, all right? This video is packed with value. I think so. If so, make sure you hit that like button, subscribe to the Unique Trading Group, and drop a comment below. There will be more videos coming soon when I have some breakdowns for you and continue to recap the market as it goes. All right, and we're going to come back and revisit this video. Hope it helps you make some money on your journey throughout the rest of this week. All right, do you think SPY is going to break 640 this week, or some data is going to crash the market? All right, appreciate you all being here. I'm Coach UV. This is the Unique Trading Group, where trading meets mindset and discipline turns into income. And I see you guys in the next one. Peace.